Property Patriot, you are cleared hot.
Welcome, high flyers, to the Aim High podcast. Have you ever wondered what would happen if you took a military pilot and teamed him up with a guy who found out at 15 years old that he didn't like working for others? Today, Nick Cooper and Andrew Jarrett talk about how they started, how they met, and how they created a portfolio worth tens of millions of dollars together. Find out all of that and more, where we provide real estate investors the tools to create generational wealth. This is the Aim High podcast, show number 36. Good day, high flyers, and welcome to the Aim High podcast. Today we are joined by Andrew Jarrett and Nick Cooper. How are you today, fellas?
Doing well. Thanks for having us, bud.
Doing great.
It's an absolute pleasure. Guys, listen, I know we are connected on LinkedIn, but do me a favor. Give me a brief introduction about yourselves.
So I'll start off first. So I was 22 years military pilot, and I did like most folks do in the military is that you move around a lot. You acquire a rental here, a rental there, and fast forward 17 years in, and I looked at the math one day. I live in San Diego. My last rental was in San Diego as well. And I saw, oh man, I'm making $150 a month on this. And I have almost $400K in equity. I'm like, oh, this is not a way to get rich. I can't get wealthy on this. And my girlfriend, now wife at the time, is like, what's your plan for after the military? I was in the military I was 17 going to 18 years. And my plan was like, I don't know. I guess I'll keep flying. So that wasn't really a good enough plan. So it takes a lot of times a woman to be that catalyst to get you into gear. So what I did is I did some quick research. I went online. I'm like, listen to some podcasts. Most folks start at Bigger Pockets. And I was like, oh man, it's multifamily. This is really the way to start it, because in single family, it took me 15, 17 years to get just a few units. And then I looked at it as far as like to be a professional and to scale, I had to go bigger. So I took off work for about 3 weeks, and I went to Ohio, drove around the state, met with brokers, realtors, all that stuff. Ended up finding a 24 unit, closed on that 4 months later. So it took me 17 years to get to just a few units. And within 4 months, I had 24. And those were cash flowing. It was a great deal. Rents were like $400. This is back 4 years ago. Now they're at $750. And fast forward a year and a half ago, so 3 years after I bought it, refied out about $696,000. And that's when I was in the military still. And I was like, why am I still here? This is more I could make in one transaction than I could make in 5, 6, 7 years in the military. So put my paperwork in, retired. And then since my first start, I've done 4 syndications, and we're at about 172 units and about 14 million under asset. And Andrew and I linked up about a year ago, and we run a coaching program that's one-on-one, and that's been great, man. Just been growing and trying to get bigger.
Awesome, man. Thank you for that. Andrew, how'd you get here, man?
Yeah, so I started when I was 15. I had a job at a grocery store and worked there for a few years and realized pretty quick I didn't want to work for anybody else. So I'm like, what can I do? I hated school. So I'm like, what can I do where I don't have to go to school or work for somebody? And I came across a book, Russ Whitney, The Hurdles and Pitfalls of Real Estate Investing. Read that. I'm originally from Western New York. This guy was in Central New York. So it resonated with me, and I'm like, man, maybe I can do this real estate thing. So I read that, took up a bunch of other books, Robert Kiyosaki, Rich Dad, Poor Dad, went down the rabbit hole, and ended up never having a job. So for the past 15 years or so now, I've just been living off my cash flow of the rentals. I started a property management company. We managed it all in-house, all the properties up there, and built it up to about 300 units or so, and self-managed those. And then in 2018, decided to go bigger. So we did syndication, and I've gone full cycle on 3 syndications so far. 152 unit in Atlanta, 113 unit in Jacksonville, and 252 units in Jacksonville as well.
So then you join forces, and you start hitting it. What was your first deal together?
We linked up, Andrew, what is it, about a year and a half ago? So we met at a conference. And actually at a conference he's supposed to go to, and then he couldn't make it due to some other conflicts. And we actually met up in person in Tampa. met for lunch and met my wife and everything and hit it off. And since then, we've been looking at getting more deals together. And I closed on 2 deals in the last year. And then Andrew's been doing his own thing. So we just decided to link up middle of last year and take down deals together.
Let's talk about numbers, your first deal. How did you get into it? What was the payout at the back end? How long did it take you to stabilize it?
For me, my first deal, I started small. So I started with a duplex, my first buy and hold anyways. I had fixed and flipped and wholesaled and all that stuff too. My first actual buy and hold was a duplex. Back then, you could get owner held seconds. So I negotiated with the seller at the time to hold a 25% mortgage, got a 75% first lien from the bank, and closed it for, I think, like $1,500 out of pocket. It was already rented and cash flowing, and I still own it today. So never sold, like a lot of them from my original days. I never sold them, just hold them and cash flow them.
How about you, Nick?
I think just kind of expanding upon that 24 unit, because I mean, as far as single family, I made some good moves back in the day, but I think that overall with that 24 unit that I had, like I mentioned before, it's getting the cash out of that almost $700,000 cash out. And then I'm still cash flowing that deal about $6,000 a month. That's after debt service and all expenses. So that's when I was like, oh, this is about what my retirement would be like. What am I doing anymore? So I think, and I still have that deal. So I think the best time to hold a deal or the best duration is probably forever.
Yeah, I agree. Why sell if you're getting cash flow, right?
Yeah, guys, I agree with you 100%. So I buy smaller commercial multifamily properties, and we look at specifically the cash flow and the ability to turn those things and force appreciation, much like you guys are doing on a larger scale. We're selfish, though. We just do it ourselves.
That's the name of the game, is to buy that time freedom where you can just do whatever you want. Get that cash coming in consistently. It's less work. It's more work up front, but once it's cash flowing and it's operational, I don't sell.
And depreciate it for 30 years, right? Never pay taxes on it if you can at all avoid it.
Yep.
Yeah. It's not what you make, but it's what you keep.
Yeah. Yeah, exactly. Right. Just got a real nice check from the federal government today. In fact,
nice.
Feeling really good.
I think what people don't get is, especially in this business, is once you start doing this full time and you're a real estate professional. I don't know if you've talked about in the past, but like I can also offset my wife's income as well.
Yeah.
So it's like all this appreciation you can take. I'm like, man, it's like on paper, I look like I'm not making any money at all, but in your pocketbook, you're doing very well.
Exactly. Now, guys, we ask all the time, what was there one deal that really had you thinking, man, I don't know if I want to continue down this path? Was there a worse deal?
I will say for me, it was more of the deal when I first started out in single family. And I think most folks who have been through a cycle, I was through that cycle in the 08, 09 time frame. And when everyone's buying, when cab drivers giving you advice on where to buy and what property to get, I bought another property near, it was a single family 5-bedroom house in a very nice area of San Diego. And I think you can't lose. And I think the biggest thing I learned from this one is that I bought it with a partner, and you got to make sure that you have aligned goals, whether it goes up or it goes down. So we only thought about the up portion of it and not about what if property goes down, because it's real estate never goes down, bud. This never happens, right?
It never happens. It
happens.
2008, 2012, right?
Yeah. So I was in that cycle and I got caught up with it, and my partner wanted to punch out and be done. And anyways, what you can learn from my mistake here is that even though this could be a friend of yours, a family member, is you have to make sure that you have a plan set in place, legal plan signed off. So this is what happens when it goes well and when it goes bad. You can't just have a plan for the success. You have to plan for the downturn. And that's a very costly lesson that I learned. I ended up selling the place. I made out okay. I didn't short sale or foreclose or anything. But yeah, I did these mistakes. They cost you money and you won't do it again. So vet your partners and make sure no matter who it is, you have it all written down legally.
It's like a really long prenup.
Yeah. It could be longer than a marriage. You can't get rid of that person.
It's true.
Andrew, I cut you off.
Yeah, I had a similar deal. Mine was also single family, which is why I don't do single family anymore. I was a fix and flip. I was doing it with a buddy of mine, and it was a tertiary market, and we totally misjudged it. Thought there'd be a lot more interest out there, but there wasn't. So we ended up fixing it up. The thing sat for a year. Finally sold it. It went into contract, I think, twice and fell out. I don't remember now. It's been a while, but I just know that it was a pain. It was a lot of work, and ended up losing money on it. And I guess the nice thing is, at least with multifamily, if you make a mistake over time, you can make up that loss with the cash flows and everything. So single family on the fix and flip, if you lose money, you're done. At least multifamily. That's why I do that now only, because, if I lose 10 grand or something, I'll make it up in overtime.
All right. Makes it a lot easier when you're looking at economies of scale.
Mm-hmm.
Yeah. Nice. Great point. So now you connect with each other in Tampa, you meet up, you guys are getting ready to move on your direction. What are you currently working on?
So as far as currently working on is that for the most part, we're looking, I'm not going to tell exact markets, but we'll just say Southeast, Florida-ish area, and then also portions of the Midwest and Texas. But for the most part, it's a deal flow is down, and a lot of people are pencils down and not actually offering. You have to be out there and offer. If the deal pencils right now, we put an offer in. So again, with the end in mind is go see, okay, hey, this is what I need for returns and offer on that. So I think the latest stat I saw was I think transactions are down currently about 74% from the year prior. But that also means there's less competition out there looking at it, but there's fewer deals. So in short, you have to be out there and offering, because if you wait for the bottom, I think the minute that interest rates get cut, it's already too late. So if stuff cash flows now, you're basically buying something at least a 10 to 30% discount for when debt gets better. So if you're going to wait for that bottom, whenever it is, you're going to miss it.
Yep. Totally agree.
So we probably have an LOI out, I'd say two a week.
Mm-hmm. That's great. Great numbers too. Yeah, you can't get that. Now, here's two schools of thought as far as I know, right? Are you working the numbers, getting your number and making the offer based on your number, or are you looking for the right deal that has the right offer? You get within that margin of error and then you make the offer. Which way do you guys work that?
I'd say you never know the situation someone's in. So you just, when I get something, you will underwrite for what you think will work. So then make an offer on that. And I think that I heard a while ago is like, I'm not looking for a distressed properties. I'm looking for more a distressed owner.
Yeah.
So that's what I want to buy. I want to buy a great property with an owner that needs to sell, because you don't need to sell. It's going to be very hard to find a deal.
Yeah, man. Made point. And one of the things that the reason I asked that question is because several of the people that listen are also students or clients of mine. And I tell them, if you're putting in the work and you're doing the underwriting and you're sourcing the deal and you're following up on the lead, making your offer, just make the offer. If you have, okay, I came up with here's my maximum allowable offer. Let me, no, I feel like they're going to turn that down. Okay, make the offer.
Yeah.
How many times are you fifth on the list with someone who can't get appraised for that amount with income valuation, and you wind up getting it at fifth?
And Bud, to your point, a lot of these offers are going to fall through from your competitors. Like Andr and I were talking on the phone about a deal we looked at a year ago for 9.4 million. It's now back in the market for 8 million. We offered 9.4 a year ago.
I was just going to say that. Yeah.
So that's where it's at right now. Like those deals may come like a boomerang back to you. Like I'd say probably 25% of deals will probably fall out. And so you better be ready to get and it's the same, things change. Could be a different debt market. So maybe your offer was 8 and 9.4. Now you're at less than 8. So offer on what makes sense. Don't feel about hurting someone's feelings on this. It's a business. Think about how you tell your wife, oh, I didn't want to hurt their feelings. Now we're paying $300K more. My wife would be pissed. She'd be like, what are you doing, you idiot?
Yep.
Wives keep you in line, man.
Well, they do. You got to have someone there to keep you in check, especially as a pilot. So it's good to keep my ego down a bit.
Yeah, I'm not going to bust your chops on that. I was intel. So it's okay. It's all right, Nick. We could still be friends even though you're a pilot.
Yeah. We need each other.
Absolutely. Yeah. So guys, now you're working on all your stuff here. What's on the horizon? I know you talked about an education program. Is that like the future, or are you guys still buying while you're developing the training program? What are you doing?
Yeah. So we're still buying.
We're still good.
No. Yeah, we're still buying. We're still making offers every week. And we've already launched our training program. So we've got students in. They're out looking for deals as well. We're helping them. And but yeah, we're minimum 2-3 LOIs a week is our goal.
Yeah, I think one thing to remember is that we're still full-time investors. So this coaching thing is an addition too, but it's one-on-one. So we can't take on too many students at once because there's a lot of time.
Are you ready to take your real estate investment sky high? The Aim High REI is the perfect Facebook community for you. Get answers from experienced investors, connect with other motivated individuals, and benefit from valuable resources all in one place. If that sounds like something that interests you, join our amazing network today, and we will help elevate your investing journey beyond what you thought was possible. Aim High REI is on Facebook, or click the link in the show notes. The best part is, it's completely free to join. I help new real estate investors overcome the fear of failure and achieve generational wealth through buying rental properties. Go to budevans.com and book a call and find out why we guarantee your first rental property. Thanks. Now back to the show. Guys, we're going to go into the Soaring 4. These are the same 4 questions that I ask every guest that can help someone who's just starting out achieve new heights. First question is, what do you use to keep yourself motivated?
I think for myself, it's going to be my family. So married 3 years to a amazing, lovely woman. And I think it's like you have to have a reason that you're doing all this for. So what is your why? And I'd say that's definitely it.
Yep. For me, it's a quote that I read a couple of years ago that I always think of. Your last day on earth, the person you became meets the person you could have become. So for me, I always just want to excel and really get to that best version of myself.
It's deep. I love it.
That's very deep.
Yeah, about you, man. That's pretty good. I didn't know that.
What is one thing that you learned that completely changed your mindset?
I think for me, you can't do it all. So if you've read that book, Who Not How, you can't. So you have to be able to let go of control to gain control. And that's something that took me a while to wrap my head around, especially coming from the military. Is I think I did a lot of things on my own, but you had a team. And now it's just, as an entrepreneur, I think you really have to find that that person to partner up with. And especially in multifamily, I'll just say is that most people that are going to cost you money are amateurs. That's why I deal with professionals. They save you money.
Yeah, great point. I agree with Nick. And also, I would say the ability to raise private money definitely changed. You can do any size deal you want if you can raise the money for it.
Yeah.
Specific trick you want to share, or is it just we're going to leave it there?
Just getting out there and talking to people. No one's going to, they say it's know or trust. If they don't know you, they can't like or trust you. So you got to get out there, get people to know who you are, just network.
Yeah. I
think to add on to, go ahead.
No, I just wanted to hear it from somebody else, man. It's perfect. Go ahead. Sorry, Nick. Go ahead.
Yeah. I think what Andrew said there, and apologize for speaking over you for a minute there. I think it's the biggest for our last deal. My wife is in sales and she did a lot of the capital raise. So we raised 1.2 million in about a week and a half. And that was almost all her. So I think the biggest mindset you have is like, this train's leaving the station with it or without you. Do you want to get on? So I don't need your money, but I can use it. So that mindset's helped a lot. And also it's true.
Excellent. Right. It's sell me this pen. It's not about the pen. Yeah. It's not about the pen at all. It's the fact that you need it and I have it. In the case of raising private capital, it's I have an investment opportunity. You want to make money. I have an opportunity for you to make money. If you don't invest, I will find somebody else who will.
Yes.
Yeah.
100%.
Perfect. All right. What tools are you guys using to keep yourselves on track?
I think for me, the biggest tool I use is probably Google Calendar, because that's something you interact with daily. So make sure that it's nothing it's a pretty simple thing, but I practice time blocking. So make sure your day, each minute has a plan. It could even be a plan to be relaxed time. But I'd say definitely time blocking.
Yep, that's true. Yeah, I use Google Calendar too, and it's definitely, to Nick's point, time blocking is essential. And also I do monthly P&Ls and update my personal financial statement just to keep track of how I'm doing and make sure I'm staying on point.
Now, that's a good point, is that especially you're doing your financial statement, if what gets attention grows. So if you calculate your net worth every month on the first, like I do, there's a calendar alert saying redo net worth. It's amazing how that grows when we start looking at it and calculating it.
If you're starting all over again, what's one thing you would change?
I'd say get in a multifamily sooner and vet your partners and treat it like a business, not a hobby. That's a big difference between just, I'm going to go out there and figure this out. No, get professional help from the get-go so it can basically shortcut your way to get. I spent a 6-figure amount on coaching and mentorship, masterminds, and everything like that. If I spent that 10 years prior, I would be a lot further along.
Yep, that's a good point. For me, I would say just push past your limiting beliefs and try to go bigger, faster, do larger deals. When I was starting out, I was 19 years old. So even just buying a duplex was huge for me. But back then, if I could have known that I could have raised money and bought 100 unit, that's what I would have done.
Yeah. It's amazing how many people limit themselves through their own beliefs.
Yeah.
Mm-hmm. All right. Guys, if somebody wanted to reach out to you, find out a little bit more about your coaching program, where would they do that?
You can go to www.jarrettcapital, JARRETT, capital.com. And you can just send me a link there or schedule a 15-minute intro call.
That's a good spot. I think we just use Andrew. And for my email is just Nick, that's NIC, at Hudson, like the river, HUDSON, blue, BLUEMF.com. And MF stands for multifamily.
Got to make that clear.
Yeah.
Kind of had a feeling that might be what it was about. All right. Hey guys, it has been an absolute pleasure having you on. I really do appreciate your time.
Oh, thanks, bud. This is awesome.
Great. All right. For those of you watching on YouTube or listening on the podcast, until the next time that we meet, aim high.